Let's be real, the market doesn't always look clean. Now sometimes it's choppy, messy, and unpredictable, but that's where traders lose their money. But I have a strategy that works even when the market looks ugly. It's built on the most simple principle. Now, when the market ranges or whipsaws, retail traders get chopped. But smart money is still targeting liquidity. So instead of trying to force trades in the noise, I watch for that liquidity run, then I wait for structure to flip before I make a move. It doesn't matter if the charts look chaotic, the blueprint is always the same. And that's why this strategy has kept me profitable through messy conditions and not just the clean trades. In this video, I'm going to show you how this strategy plays out in ugly markets and why it's one of the most reliable systems I've ever used. The strategy is based on London session, which can range from 8 AM to 10 AM UK time. So let me just fix that. 8 AM all the way to 10 AM UK time. This is where we catch the London session move. Also, we're going to be using the fib for our entry, 65% zone, 62% zone. This is better known as our golden zone. So price is likely to tap into this and give us the most perfect substantial entry. Now, after that, we're going to look for a market structure shift with displacement plus a liquidity sweep. So super simple. We're going to follow these concepts and we're going to make tons and tons of profits trading this strategy. And again, if you want us to pass, manage your funded challenge and get you a payout and you don't pay a single penny until you do get that payout, click the first link in the description and you can see how we've helped hundreds of traders actually accomplish this goal in less than a month. So click the first link in the description and let's get you started. But for this, we don't do absolutely anything before our trading time. So if price wants to go up, price can absolutely go up. But if price wants to go down, it can go down. We don't do anything before our trading time. So when we do come to our trading time, this is where the magic happens. So let's say we come into our trading time like this. Let's say we have clear signs of a potential market structure shift like this. Boom. So what can happen now is that we're going to take the Fibonacci. Once we had the market structure shift, you can see we previously had a liquidity sweep. We're going to take the Fibonacci and we're going to mark from high to low. So once we mark from high to low with the Fibonacci, we're going to wait for price to retrace into our 62% zone. Just like this, what we're going to do, we're going to enter the position, show position. We're going to put our stop loss just above the high or a minimum of 5 pips. In this example, I can't use the 5 pip goal because it's going to be way too big. But once we get that 5 pip mark, what we can do is we can target 1 to 2 R or even more depending on if there's liquidity points to target on the other side of the market. Boom. As you can see there, we ended up hitting take profit. And again, if you guys want us to pass and manage your funded challenge, and remember, you don't pay a single penny until you do get a payout. So we'll guarantee that you get a payout, you keep 70% of the profits and we take 30%. We work on a pay on results basis. So if you want to be like hundreds of traders which we've helped get funded and pass their challenges and get a payout, click the first link in the description. But let's get straight into this example. So as you can see, before our trading time, we're not doing anything, but we're letting price do what it wants to do, basically. So as you can see, if price wants to go up, it can go up. If price wants to go down, it can go down. So what we can see here, we can make sense of everything. So we have a nice clean uptrend. And prior to that uptrend, we had some sort of liquidity sweep over here on the side of the market, or we had like equal lows forming and stuff. We did have a liquidity sweep here as well. What also ended up happening is that we broke out of the structure multiple times. So we had a market structure shift with displacement multiple times. And as you can see, price just kept moving towards the upside. So what we're going to do, we're going to grab the Fibonacci and we're going to mark from low to high. We're going to let price do its thing. And as you can see, it does end up retracing into our 62% zone. So once it retraces into the 62% zone, we can enter. This is a perfect stop loss, 6 pips. We could put a stop loss at the low. And what we can do is we can just target 1 to 2 R just like this. Boom. So as you can see, we let it play out. Boom. It ends up hitting take profit. And again, if you guys follow this, this will make you so consistent in your trading. So again, be sure to watch all the way to the end of this video. And if you want to be like many other traders who are getting funded hands-free and getting payouts in less than 60 days, click the first link in the description and we'll help you get funded and get you a payout without paying a single penny. But let's get into the next example. So again, guys, super simple, and I want you guys to be able to follow through all the way with this. So as you can see, we come to our trading time right about here. Boom. So here we go. We let price do what it wants before the trading time. We're on the 5-minute time frame, and we're gonna see what happens, how price is reacting to the market conditions. Boom, boom. So as you can see, we have price. It just created a market structure shift with displacement. So we can say we had this trend line liquidity here. It was being taken out consistently. Then we ended up having a market structure shift with displacement. So we could just mark that out as MSS. And you can also see we had like the respecting of this high right here, which is also another great sign. So what we can actually do at this point is we can wait for price to form the final low before we actually do mark from high to low. So as you can see, price has done exactly that. We're going to mark from high to low. As you can see right here, it's exactly at the 62% zone, which I told you guys about. So we're going to go short position. For this one, we can do maybe a 7 pip stop loss, just a tiny bit above price, and we'll target, just about 1 to 2 R. Or maybe even a 6 pip stop loss is fine. Yeah, 6 pip is fine. And we'll just target 1 to 2 R, just like that. So you can see there's multiple liquidity points on the other side of the market to target as well. So we can expect price to come down to these sort of levels with depth. And let's actually see how that does end up playing out. As you can see, it does end up hitting take profit, and it does go way lower than we anticipated. So again, if you guys did enjoy this video, don't forget to like, comment, and subscribe because it's completely free, and I'll see you guys in the next one.